Kitco News, special coverage of the Precious Metals Summit, is brought to you by Corvus Gold.
Kai Hoffmann, CEO of Soar Financial Group. Welcome back. Good to see you.
David, it's great to meet in person.
Yeah, finally, we're they let us out of our cage. This is one of the feedbacks I've seen on our videos, but beautiful conference here in Beaver Creek. Not so beautiful in terms of the sentiment for the market. Kind of a dichotomy. We're in this great place, beautiful scenery, and everyone's just somber. So anyway, what happened? What happened this year?
That's a very good question. I'm just still working on figuring that out, but a lot of things played against us. It's still, cheap money is still widely available. So the main markets have just been going up. I recently compared S&P versus GDX. Right. 30% plus for the S&P, 30% minus for the GDX. Right? So there's a diversion in that. And why would you invest in the GDX at this point when you can have that easy money pushing your stocks higher and just generate those 25% returns for your retirement income?
Well, that's true. Yeah, I mean, nobody had the foresight of what happened this year. Back last year, I mean, everybody I was talking to last year was telling me that gold was going to go up to $3,000. Silver was going to go up to $40, $50. And if we had this conference a year ago, which we didn't obviously because of COVID, the sentiment would have been euphoric. But what a difference 1 year made. Do you think it's because of the outperformance of the S&P 500? Do you think it's because of easy monetary policy that ironically brought gold down and brought capital away from this sector?
It's various factors. Like Bitcoin is one factor, but the main market's sucking up that money. Like as a generalist investor, why would you go into a high risk sector like ours? It doesn't make sense. If you can make 25% every year continuously for the last 10 years pretty much, why would you shift? Right? And I've been saying that a bunch of times now, and for a number of years, we need to scare the main market. We need to scare that 401k money into something else. So they need to have that. Inflation is pushing it as well. Maybe inflation is that trigger at some point. Because I've been asked personally by friends out of the US as well, like, how do I hedge my portfolio? I'm worried about losing my savings. Like, where can I put it? Silver, gold. How do I hedge? What do I buy? Right? And I think that conversation is starting to happen more and more often, especially with those higher inflation numbers. Right?
What's your answer to your friend? I'm just curious. Do you say buy the S&P 500?
No. I said no. It's like to divest or go into like the ETCs, like the Sprott ETFs, like buy the physical, the ETFs underlined by physical gold and silver. Right. Buy those just as a hedge, right? Yeah. Just as inflation hedge. Yeah. Like you don't even buy the stocks because it's too complicated sometimes. You can buy the bigger ones, like a Barrick now is yielding 4.8%. Sure. Right? That's great. I'm sure the value investors will start to see that eventually pop up on their radar screens when they're reallocating this fall and are looking at dividend plays, and they get the double kicker. They get the gold component where they can hedge a bit against the main markets with a gold stock, but they get also the dividend. So, and that should be attractive, and I hope that attracts some investors.
We were talking about how sentiment is kind of the same now as it was back in 2015. Yeah. We had this huge kind of flat plateau of prices that lasted a couple of years following the crash of 2012. Do you think that this is the similar situation where we're going to see prices stabilize around $1,800, $1,900, and just stay flat? Maybe this is the price for gold for the next couple of years?
As an investor, I have no problem with that. Personally, because companies are producing free cash flow left, right, and center. They're deploying exploration budgets again because they are making that money. So I don't have a problem with $1,800 gold or $25 silver.
Well, the market looks like it does because the miners haven't been doing well, even despite, you're right, I mean, despite high margins, despite good cash flow, the miners have been underperforming the S&P 500.
Margins are being squeezed just a little bit right now by higher input costs. I was just on a site visit last week and I spoke to one of the drillers and he said, hey, I got 3 raises this year alone. Yeah. Right, and I'm sure that's happening across the sector. It's not just one driller, and that's squeezing it. Last year we had a perfect scenario. We had low input costs, rising gold prices, cheap stocks, valuations were just going up. Right, that was really playing it. So all factors played for the gold stocks, and now it's against it. Sentiment against gold because you don't really need it to hedge right now. It's not that safe haven investment people are running to at this point because it is too easy to make money in the main markets.
And what are companies doing right now to protect themselves against inflation?
Companies themselves are, in my opinion, not doing enough in this low debt environment.
What could they do? It's not like they can raise the price of their products.
No, they can't, but they can invest into their pipeline. So I'd love to see a Barrick come out or one of the bigger producers come out and say, okay, we're raising more debt just to fill our pipeline. Right? And you had Barrick CEO Mark Bristow on recently, and I thought it was a really good interview because he was highlighting that, hey, our exploration pipeline is 5 to 7 years just on the brownfield side.
That's right.
Right? And they don't have to divest anything. So right now is actually also for me the time just take on that cheap debt and maybe fill that pipeline, be a bit opportunistic because valuations are down. It does make sense to do that right now. Like there are companies, producers trading at PE ratios of 2, 2.5, 3 at best. And that's attractive.
Brownfield exploration, greenfield exploration, do you think that should be the job of the juniors, or do you think seniors should do more of that?
Both. Like I like to see both. Juniors are very healthy, starting early on, grassroots prospecting, taking it to a certain stage, and then the majors ideally come in and buy it. But they have those projects that they bought from the juniors that there's a lot around to discover. It's not like when they buy it from a junior, that's it. Pipeline, like they've done the resource delineation and that's it. Right? There's still a lot left, especially at higher gold prices right now, where they can start looking at $1,800 gold. All of a sudden, it makes sense to expand a pit or add another satellite deposit to it.
Okay. Now let's talk about the Ornick Index. You track financing in Canada very closely. What does that index look like right now?
It's back to mediocre. It was pretty bad over the summer. It was bad. Okay. It was really bad over the summer. Like a lot of people just used the time and the possibility to travel, and they flew out. They went to their cabins, their cottages, so they didn't care about the markets. We've seen that volumes dropped off. Interest in financing's dropped off. Like I think there was a holiday. I think it was the July 1st weekend, or there was a later holiday as well. It dropped off to one of its lowest scores we've seen in like 2 years. Okay. Right. So
and just for reference to our viewers who may not be familiar, what does this index track exactly?
Yeah. So we track junior companies, mostly juniors, market caps below $1.5 billion and financings below $100 million. And we also track broker activity, bought deal activity, which really reflects can the brokers make money, and if they can make money, of course, there's the sector is of interest for many.
I remember speaking to you last summer, when gold prices were spiking to new all-time highs, and you had told me that there was more financing raised in 1 month than all of like the previous year combined. I have a theory, and I think it's maybe all the financing that needed to be raised was done last year, and so nothing needed to be done this year.
Good point. But juniors are drilling, so they're burning up some of that cash, right? So there's always that need. Juniors will always have to refinance, and we're in that cycle again. And we're seeing it. It's coming back slowly. The index, as I said, it's mediocre. It's not bad. It's popped up a little bit. We've seen a couple more financings, but the bankers haven't really picked up the phone just yet. So I'm curious to see what's coming out of this conference in terms of maybe bought deals or brokered deals for some of the junior companies.
So if you are a junior miner, what are your options right now for financing?
Well, cheap debt is one. Like you mentioned miner, not exploration companies. A miner is somebody who's producing in my eye. So it's easy to take out some debt. Like ideally you're debt free.
So somebody who's producing, has cash flow, can take out debt from a bank.
Easily, super cheap. And I want them to do it actually, because I want them to buy something with that cheap money, right? It makes sense. It's way cheaper than issuing equity.
An explorer who's not doing any production.
You have to raise equity. Right. So, but there's options. Like we've seen a couple of financings recently without a warrant attached. So there is interest in the sector. It's not like it's completely gone. If you're a good and far advanced project, there is money on the table. For developers, especially, I've been hearing rumors about one of the soon-to-be producers just about putting their financing package together, raising $60 million worth of equity, no problem.
Okay. So we talk about finance, the peaking order of financing, of raising capital. Equity is typically the most expensive, most risky, yet that's the only option available for miners, for explorers right now. What about, let me just float some ideas for you here, because ICOs, initial coin offerings.
What are you going to base that on? Like, what value are you going to base that on,
you
right?
Can make whatever value you want.
That's the thing, right? It's like we've seen that actually a couple of times a few years ago. There was a group out of, I think it was a project in Nevada that tokenized some of their gold in the ground. Right. But who do you believe that it's actually there? Like, how do you, and that's my biggest problem with tokenizing like options on gold in the ground. Right. Like, whose report do you believe? Like once they start going into production, you always find out there's something wrong. You can't recover half of it. It's not even there because they extrapolated it. It's not even where they thought it was. So how do you tokenize that and put a value on that? So I have a hard time with that part, but I'm willing to learn on it and learn about it.
Okay. Crowdfunding, $2 million.
Too small.
No, okay.
Because you'll crowdfunding $100 checks.
Yeah.
Not going to cut it, unfortunately. Right. There's other options, debt. Which is not preferred. Like junior explorers shouldn't raise debt because they don't have cash flow. What are they going to? How they're going to pay it back? It's a death trap. Streams.
Streams,
to a
yeah.
degree,
Do you
that's one.
advocate for streams? Yeah.
Not yet. No, it's for explorers. I think it's too early because you give away quite a bit of the upside on the project in the end because you need to finance it to take it into production at some point.
Yes.
Selling a stream too early will cap some of that upside for future investors.
Okay.
So you have to weigh your options really carefully. If you're a silver, gold, zinc, or if you're a silver, zinc, lead producer, or hopefully hope to be a producer, maybe you can stream away some of it early on. But you got to be really careful about that.
If I were a producer, if I were an explorer and I have no plans whatsoever down the line of producing my own minerals, then I don't need to be going into a streamer kind of contract.
No, it's like it takes away that upside.
Because the way I see it, if I'm not producing at any point in my future, I'm setting myself up for acquisition. So there's no need to have some that sort of profit sharing.
No, you want your balance sheet as clean as possible, like on the debt side as well as in the equity side, meaning keep dilution low as much as possible. There are other options, maybe getting a joint venture partner in, getting a strategic to buy in, who could be a potential buyer in the end, in the long run. So those are some of the options the juniors have.
Well, let's take it back to for our retail investor audience now. They're probably wondering how to pick mines and explorers during today's environment. So any tips and advice of criteria that you're checking off, boxes you're looking at?
Good question, because I've been asked that before today as well. And I said, I'm staying in North America because I can travel in North America right now.
Interesting.
Majors can travel in North America.
Right.
So within Canada or even down to the US to a degree, depending on where in the US, depends on the COVID situation a bit.
Okay.
But that's where I would invest right now. You don't have to go far-flung places. Even South America, I love certain jurisdictions geologically, but it doesn't make sense to venture out too far at this point.
So site visits are important for you.
Really important. I've just come back from a couple actually. Like I've been in Quebec and Yukon just the last 2 weeks, getting hands-on experience, talking to the geologists, seeing what the company's plans are. It doesn't really always translate in the PowerPoint or even in a virtual meeting.
That's right.
Because you can't look at the core. And I'm not a geologist, but it tells you what they're looking at. How big is the zone? Right. Does it make sense? Where are they drilling? Should they be drilling deeper? That's something you find out on a site visit. It's a little difficult for the retail investor to do that, but I do encourage everybody, if you live in like the Northwest US, you have access to Idaho, Northern Nevada, just go out. The companies are happy to host you.
And what are some of the questions I should be asking on this site visit? If I get to see the CEO or the engineers or some of the geologists, what should I be asking them?
What are they targeting? What's their goal? What's their end goal when they're drilling? Like, what are they hoping to achieve with that drill program, and how are they coming along with that? Right. So try to understand the potential size, because I'm always looking at the end game. Like, can this be a mine? Are they drilling, in my opinion, like, again, I'm not a geologist, but I'm trying to understand size potential of certain deposits. It can be small. It really depends on what the company tries to achieve. But are they drilling in the right place to achieve that? And can you make money as an investor? Then you got to look at the valuation of the company and see, okay, like in my opinion, that company can have a resource of 1 million ounces. Okay, what are they going to produce? 10 years, 100,000. What's the market cap? If it's already $250 million, there's not much upside left.
Right.
So.
Okay. Finally, let's talk about the market outlook for different metals. Now, copper has done a nice run last year, base metals as well. Do you think that precious metals will eventually catch up, and what will be the catalyst?
Catching up is, no, I'm not. I don't think they are, because I think we're already at a high level. So catching up, if you look at the overall value of gold and silver, or gold in particular, like I think we're being a bit too greedy, because we're looking at copper and we're looking at Bitcoin and how it's all run. That's what I said earlier. Is like I'm happy with 1800, 1850, or even 1795, because we had a good run. And for gold, it's a massive move to go up 30% from 1,200 to 18, or 50% actually, from $1,200 to $1,800.
Finally, let's end on your market outlook for the various metals that miners are working on: copper, silver, gold. Which of these do you think, and other base metals as well, which group do you think has the most potential in terms of growth going forward?
I think copper still has most potential overall.
It's already had a nice run in the last year.
It had a nice run, but I think based on the demand we're seeing worldwide, like government saying we need EVs by 2030, all EV sales, and nothing else, pretty much banning the internal combustion engine, we need more copper, for example. That's just a driver. It's just supply demand there. We'll have to see how that goes. Yeah. Gold and silver, I'm quite happy with where we're at. I mentioned that before. Yes. I want to see valuations catch up first. I hope valuations catch up first in the stocks and in the miners and explorers first.
Interesting. So you think valuations aren't even reflecting $1,800 gold?
Not at all.
What do you think they're reflecting?
It feels like more like 1,200, 1,300 again. Wow. Right. Not on a numbers basis, just sentiment and gut feeling. Okay. We've talked about Barrick is down year to date, I think 30%.
Yeah.
Why is that? Like that's what I'm trying to figure out and understand. and those valuations, they're not reflecting $1,800 gold. Right, and I'd rather see Barrick make a turnaround first, have $1,800 gold for a while, and catch up to that level.
When you analyze it like that, I mean, when you phrase it like that, is that either A, an opportunity for you, or B, a huge concern? Because that could mean that the industry has some serious structural problems that would bring it down to such a valuation that is completely disconnected from the base metal.
I think it's a huge opportunity, and going around the conference here, I think it feels like shooting fish in a barrel.
Right. So anything's a buy. Pretty much.
Let's not go as far, but it feels like it.
Yeah.
Because valuations have come down over the summer because the summer dollars have been so bad in our sector. We are a high risk sector. A lot of people sold their positions over the summer. Hopefully coming back now. We've seen a little bit of a bottoming phase the last 10 days, trading days, which is good. Let's see what the fall brings. Let's hope tax lot season is not as cruel as it usually is. So let's fingers crossed.
So the bottom line is you don't think that gold even needs to catch up to copper?
No, I don't think so. Like we've had a run in gold. And now the miners, the stocks are trying to catch up, or I'm hoping that they're catching up. Copper, different supply-demand fundamentals, unless, of course, we see a massive macro event, massive higher inflation, so that would push gold different levels. Like as of right now, I think.
So if I hold a bunch of bullion in my account, in my trading account, would you recommend I sell that and buy the miners instead, rotate that into the equity side?
If you're holding bullion, just keep it. That's your hedge. You're not trading bullion.
Okay.
You shouldn't, at least, right?
Okay.
You can trade the certificate on bullion, but you don't want to trade the physical. That's just something you keep in your safe and save it, unless you have to really cash it in.
What if I have like a GLD or something?
It's good. Like it's worth it. Like buy physical gold or physically backed certificates, ETCs, ETFs. Fantastic.
Okay. So
although I don't think the return is not going to be as great as with a gold mining stock in the next 6 to 12 months.
Interesting. Okay. Cool. All right. Fantastic. Kai, thank you so much for coming.
David, it's been great to see you.
Yeah. Absolutely.
Fantastic.
We'll see you again soon.
Hopefully.
Thank you for watching Kitco News.
Kitco News special coverage of the Precious Metals Summit is brought to you by Corvus Gold.